we've looked at how a company discards or sells an asset, but there are times when the company decides to exchange the asset for a new model or for a new asset. There's one concept we need to discuss before we can look at an exchange. That is the concept of commercial substance. This is the idea that the exchange improves or alters the company's future cash flows. In other words, the exchange actually brings some type of benefit. So, for example, you have a 2004 Toyota Solara. It's a hardtop coupe. If I ran out and traded that car for a 2004 Toyota Solara, same number of miles, but it's a convertible, does that exchange have commercial substance? Well, absolutely not, because that in no way, shape, or form improves anything with my cash flow. All it does is replaces a hard-topped asset for a convertible, which does absolutely nothing to generate any profits or alter cash flow. You may look better doing it, but it's not going to last any longer than the other car, with all things being equal. So that lacks commercial substance. I know that sort of sounds like a silly example, but in the past that would be done. So if the exchange has commercial substance, now why does it matter if it has commercial substance or lacks commercial substance? Well, if it has commercial substance, the company gets to recognize all gains and losses associated with the exchange. So if it has commercial substance, we get to recognize gains and losses. If it lacks commercial substance, we recognize losses but defer gains. Okay? So now, at this time, we're only going to review exchanges that have commercial substance. So no matter what, we're going to always recognize gains and losses. But I did want to make you aware that it is possible for it to lack commercial substance. And in that case, you can recognize losses, but not gains. Alright, so we're only going to look at examples where you actually have commercial substance. So let's look at this example. Again, we've got Parker Company, and Parker Company has a Boeing 757 airplane it purchased in January of 2010. On January 1st, 2014, the company decides to exchange the airplane for a Boeing Dreamliner. So we're moving up in the world. This will improve the capacity and generate additional cash flows. So therefore, the exchange has commercial substance. Again, remember we said at this point we're only going to look at exchanges that have commercial substance. The book value of the 757 airplane at the time of disposal was $700,000, and this was created from a cost of $1 million and an accumulated depreciation of $300,000. Parker Company will exchange the airplane plus $600,000 cash for the new Dreamliner airplane. The fair value of the old 757 airplane at the time of disposal was $800,000. Again, that's the fair value. Record the entry Parker Company would record for this exchange. All right, before we go in, we must figure out a couple of things. One, ask yourselves, is our depreciation up to date? And in this case, absolutely, because we're in January 1st, 2014. It says the book value at the time of disposal. So as of January 1st, our book value is $700,000. So our accumulated depreciation is up to date. So let's look at this T account. And you'll need to draw these on your handout there. You'd have $1 million value in the airplane. Remember, airplanes are assets, so if it has $1 million balance, that means it has a normal balance, and that would be a debit. And then we've got the accumulated depreciation. Well, all it says is it's a $300,000 balance. Well, if it's a $300,000 balance and accumulated is a contra asset in this case, or in all cases, accumulated depreciation is a contra asset. So contra assets would have a normal balance of a credit. So this would have a credit balance of $300,000. So this is how our company calculated a book value, and remember book value is cost minus accumulated depreciation of $700,000. So that's the first thing you always need to find is what is the book value of the asset at the time of disposal. Alright, now once we have that book value, the next thing we have to figure out is do we have a gain or loss on this transaction. And remember, gain or loss is calculated by taking what we receive minus the book value of the asset. Well, ask ourselves, what did we receive? Well, when you exchange an asset, what do you receive? A lot of times people want to say, oh, I receive a new asset. You end up with a new asset, but that's not what you received for your old asset. Remember, if you take your car to the dealership, what you receive for your old asset is the fair value, the fair trade value of the asset. Now, you can dispute how fair that is all you want to, but if you accept it, that is its fair trade value. So in this case, our asset's fair value at the time of disposal, or fair trade value, would be $800,000. So that's actually what you receive for the asset. You receive the asset's fair or trade-in value, okay? So then we're going to take that and we're going to subtract from it that $700,000 in book value. And that gives us a $100,000. And since it's positive because our book value is less than what we received, we have a gain. Okay? So when you're talking about exchanges, what you receive for the old asset is the fair value of the asset, the actual amount they give you as a trade-in allowance, so to speak. Okay? So now, once we have that, there's one more thing we must calculate before we can record, and that is the value of the new asset. Now notice, nowhere in here does it give us a purchase price of a new asset. However, we are getting a new asset at the end of this whole exchange. So what value would we place on that? Well, what you need to do in that case is you always take the fair value of the old. So the fair value of what you're giving up, and you're going to add to it any cash paid. Okay? Now, another way to look at that is the fair value of the old minus any cash you received. So had you done this exchange and received cash, then you would have to subtract that. But in this case, we paid, right? It said we gave up the old asset plus $600,000 cash, so we paid cash out the door. So to figure out the new value of the asset, we take the fair value of the old. The fair value of our old asset was $800,000. We add to that any additional cash that we had to pay, and in this case we had to pay an additional $600,000. So that means our new asset is going to be recorded at $1,400,000. Now, in an exchange, I always suggest you do this. You find the book value, you calculate the gain or loss, then you calculate the value of the new asset before you record the entry. Okay? So let's record this entry. So again, this is January 1st, 2014. Well, first thing we always need to do when we have an exchange is record our new asset. Remember, this new plane is coming on, and it's got a value of $1,400,000. So we need to put our new airplane on the books, and I'm just going to call this airplane D, which is airplane for Dreamliner, okay? And that's going to come in at $1,400,000. Now, the next thing you need to do is remove the depreciation. Remember, in the end, we have to remove all evidence of the 757. Well, to do that, we need to debit the accumulated depreciation and we need to credit the airplane. So since we're working on debits, we're going to debit accumulated depreciation on the 757 for its value of $300,000. Okay? Now, the next thing we need to ask ourselves, do we have a gain or a loss? Well, in this case, we had a $100,000 gain, so that's going to be a credit. So we're going to credit our gain on exchange in this case, and again, we said that was $100,000. Next, did we receive or pay any cash? Well, thank goodness we paid cash. That's going to go out, so that's going to be a credit of $600,000. And then the last thing that we need to do is go in and remove. Notice we still have this airplane on our books. We need to remove that airplane. So we're going to credit that airplane, the 757, and we're going to credit that for the $1 million price. All right, now sometimes you may see airplane and it may say new and airplane old. That works as well. Just as long as you track that you're getting rid of one airplane, you're putting a new airplane on your books. All right, so our steps. 1, you figure out the book value. 2, you calculate any gain or loss. And 3, you find the value of the new asset. When you go to record it, the first thing we need to do is put the new asset on our books, then remove any accumulated depreciation. The third step, if you receive cash, you need to debit cash, or you need to look at the gain or loss. In this case, we had a gain, so gains are credits. Then we credited the cash movement because the cash was being paid out the door. and then we remove the old airplane from our books. So that's how you record, how you figure out how to record an exchange of an asset that has commercial substance.